Ja, hallo, hier ist wieder Michael Adams von Stock-Telegraph. Ich hatte ja angekündigt, dass ich einen neuen CEO-Roaster machen möchte, und zwar mit Nicola Mining. Ich bin auf das Unternehmen jetzt vor kurzer Zeit aufmerksam geworden, weil ein befreundeter deutscher Fondsmanager mich darauf hingewiesen hat, habe mir daraufhin die öffentlich verfügbaren Informationen zu der Company angeschaut und ja, war einfach begeistert. Ja, muss ich jetzt mal wirklich so sagen. Ja, also ich kann kaum glauben, was für ein Potenzial in dieser Company steckt, wenn ich diese Informationen richtig verstanden habe. Und aus diesem Grunde habe ich Peter Espig, der ist CEO und President der Company, eingeladen, um ja, mir wirklich dann meine Fragen zu beantworten, ob ich recht habe oder ob ich vielleicht irgendwas übersehen habe. Dazu habe ich noch den Peter Epstein genommen. Er ist ein Researcher, ein Analyst aus New York. Seine Webseite ist Epstein Research. Ich verlinke das aber auch nochmal hier unter dem Artikel zu dem Video. Und ja, freue mich wirklich und bin gespannt, ob meine Einschätzung des Unternehmens sich deckt mit dem, was der Peter Espig uns jetzt erzählen wird. Viel Spaß! So, Peter, what draw your attention towards Nicola Mining?
Well, in a market where liquidity is of paramount importance, a strong manager team and strong assets, even with that environment, it's difficult to draw attention to companies, small cap companies on the venture exchange, which potentially offer some very superior upside. And here it is in December 2015, and of course, people are waiting for probably the first quarter, but in the meantime, I think it's important to do some due diligence on some target investments, such as Nicola Mining.
Right. And are you also familiar with the predecessor company, which used to be Haldra Silver?
I have become familiar with Haldra Silver through speaking with Peter Espig and, of course, the interview that we did together, which again can be found on epsteinresearch.com.
Oh, okay. Good. Yeah, and so yeah, I'm on the same side as you. Yeah, I checked the material that was publicly available, and part of it is the presentation, which is on the screen. And there's so many. It's not a typical mining story, right? So it's more like, and it's not even real toll milling. Yeah, toll milling was one of the hot topics in Canada and also in Germany. I'm not sure about the States, but it was a hot topic. Most of these companies were based in South America, and they have their own, let's say, challenges to face, right? And so I think that there's some similarity in the approach of Nicola, but it's not a typical toll mining story or toll milling story as far as I understand it, right?
Yes, that's correct. That's a good point. In Peru, for example, there are a number of toll milling operations. Nicola, though, I think has a superior opportunity simply because they are the only toll milling operation in British Columbia, whereas in Peru there are a number of public and private entities, and the market is more competitive as a result.
Right. Okay, good.
Can you
Peter,
hear me now?
Yeah, now we can hear you. We just lost you for whatever reason, and so we already started going into the discussion a bit. But now that you're back, yeah, it's my pleasure to introduce Peter Espig, CEO and President of Nicola Mining. He will start with going through the presentation, I guess, and yeah, we will just ask from time to time a couple of questions so that it gets a little bit more entertaining. So, Peter, the stage is yours.
Thank you. First of all, thanks for having me, and hopefully that my explanation will be able to properly explain the assets that we have. I'm very excited about the future for Nicola Mining. I would say that we have 4 assets that are of significance. So sometimes people have a difficult time in really understanding what Nicola Mining is, and it's because, as our motto says, we're more than a mining company. We're a company that is focused on business opportunities and cash flows that are both mining and non-mining related. So if you look on the slide 4, you can see that we essentially have 4 assets of significant value to the company, and the first asset being the $21.6 million mill that is located near Merritt, BC, To put it in a geographical perspective, it's in the center of British Columbia, and it's in a very well-known gold and silver mining region. We also have a line tailings facility. Now, the significance of the line tailings facility in the mill is that historically we are the only mill in British Columbia that was permitted to mill to process ore from other jurisdictions in British Columbia. Typically, what you have is you have a mine, and right beside the mine is the mill. But ours was different. We had a mine, and then we had a 90-kilometer drive to the mill. So we were initially permitted to mill from other areas. Now, what that has done, and this goes to Peter Epstein's point on toll milling, is that it opened up the opportunity to become a toll miller. The other asset, a unique characteristic of our property, is that we are I3 industrial zone site that we paid $8 million for, so we actually own our own property. We own the land. That is very significant because typically what you have is in British Columbia, mines are located on Crown land, and they have to reclamate that back to natural, historical natural level of First Nation usage, and that is a very difficult position to be. First of all, to get permitting, and it's an expensive process to reclamate it all the way back. And I'll get into it later, but the I3 zoning allows us to have industrial uses, which we've opened up the door to do that. And we also have a gravel pit, aggregate mine. The estimated resource on that pit is somewhere between 21 to 29 million tons of gravel. We do have an offer on that. It is a non-core asset, so it could provide a potential sale we listed the property for 2.5 million, and we received an offer for 2.25 million. Hopefully, we are looking at closing that next year. We also have, obviously, we have Treasure Mountain, which is the silver mine, and it's interesting because if you were to ask management what are the four assets, even though we had a silver mine, a high-grade silver mine, it is not one of our top four assets. I think the asset that we are most excited about and that really provides the upside is the bottom, the Thule Copper. The Thule Copper is located on the historical Craigmont open-pit copper mine, which at one point was the largest open-pit copper mine in the world. We are located beside Teck Resources' Highland Valley Copper project, and it's something that I'll get into the presentation a little bit later, that we believe that there's copper resource upside. But again, I'd just like to highlight that we consider the property to be the local milling hub, or the milling hub for British Columbia, and British Columbia the toll milling has become it's become a business platform in several South American companies. I think the way you have to distinguish our site and toll millers is that I don't consider us to be toll millers. I consider us to be partners. We take a percentage of their ore. We take 50% of their resource. We share the profit evenly. And unlike in other mining jurisdictions where the barrier of entry is CapEx, ours is more political, where it's very difficult to get a mining permit. I think if you look at the company, one of the things we pride ourselves, and slide 5 highlights this, is that we execute, and a lot of companies talk about what they're going to do, and I think we can feel a lot of pride in having executed on a lot over this past year. When I took over the company as CEO, 1 week later I put it into CCAA, which is creditor protection. We restructured the company. We then went out in November of 2014. We raised funds that would allow us to remain afloat. We then on November 24th, 2015, so last month, we announced that we would be exiting CCAA. We have all the requirements to exit CCAA have been met. We expect to be exiting CCAA as soon as we can get the appointment with the judge. All we need is a stamp, but you have to wait in line for that. So I would expect us to have exited CCAA by the end of this year.
Okay, Peter, let me ask. Sorry, Peter, go ahead.
Yeah, that's funny. We both. Okay, so Peter, I'm wondering though, you should make it clear perhaps that the stock is trading. It's NIM on the venture exchange. So coming out of CCAA is not prerequisite for the stock to already be trading.
Okay.
And let me ask a couple of questions. So this CCAA, and I'm not sure if the German investors are familiar with this, is this kind of like Chapter 11, like a bankruptcy protection stuff? And how did the company, like the predecessor, which was named Haldor Silver, how did it, what was the reason that they failed to pay their debt?
Okay. So, just give me a second here.
Sure.
Yeah, so Nicola Mining, we, as I mentioned, we are in the position to exit CCAA. Now, CCAA is often confused with Chapter 11. This is a little bit different. What CCAA allows Canadian companies, this is a Canadian protection law that allows companies that are not necessarily bankrupt, but or going bankrupt, but they need more time to restructure. So it is a restructuring mechanism. At the time, Nicola Mining was, so when I took over as CEO, Nicola Mining was called Haldor Silver. And Haldor Silver was a company that was just, it had raised $50 million, it had spent $50 million on CapEx, infrastructure, the mill, the tailings, and the mine itself. But right at the time, as a lot of these mining projects, as you know, they get delayed 6 months and then 7 months. So unfortunately for Haldor Silver, the loans came due. They had $26 million of loans come due within 5 months of starting operations. So at the time it went into CCAA, or the creditor protection, Haldor Silver had just started becoming cash flow positive and was, you could say profitable. But that said, being profitable doesn't mean that you are able to meet your debt obligation. And so when I took over, the company had over $26 million of debt that was in default, and so we had to stop everybody and needed time to restructure the company, which is what we did. The first thing we did is we put it in CCAA. We then listed in order to get cash flow, we listed the gravel pit for $2.5 million. As I mentioned, we have an offer for $2.25 million. They've already put a deposit on that offer. We then looked for ways to maximize or unlock the value of your assets, because if you have a large mill that is capable of handling much more than your mining capacity, then that opens the opportunity to look at other milling opportunities. Now, the site, the historical Craigmont mine, had a 30,000 ton per day milling operation. A typical gold mine would be milling, a small high-grade gold mine will be milling approximately 500 to 700 tons a day. So we are on a site where we have the ability to not only do our own toll milling, but we have the expansion possibility where we can put other mills on the same site. We have enough power and water to put 3 more mills on our site. We have currently 4 milling partnerships, and the typical partnership, it's a very simple structure. They're all the same. The miner pays for their mining costs. So we have all of our 3, we have the 4 contracts, 3 of which are gold focused and one is silver gold. The miner pays for all the costs of their mining operations. They pay for all the costs of the shipping to our site. We then pay for the milling costs. We then charge them for a storage cost because we are storing the material after the leftover material from the ore on our site, so that's a storage fee. And then we take the profit and we split it 50-50. So those are all the same. And because we are and I always give the analogy that in British Columbia there are over 100 small gold projects that have under 400,000 ounces of gold, some of them 50,000 ounces of gold, high grade, but if you have 50,000 ounces and you're running an ounce a ton, the problem is that it doesn't justify building a mill, and you're looking at a 5-year process to build a mill, and this is where we come in and we they'll bring the ore to us, mill it, and then we share the profit.
Let me just ask another question. So it's not only the time and money to build a mill, as far as my contacts in Vancouver are telling me, you probably won't get a permit for building a new mill. Is that right?
I would absolutely agree with that. I don't see anybody. So the way the British Columbia is right, where the situation in British Columbia is that you have to, prior to getting a mill, you have to do an environmental study. That environmental study is about 3 years long. Only after that environmental study can you then go to the local First Nation groups and reach out to them and say, here's what our project is. So and it's a multi-year process. So it's an expensive process, and if just to look at numbers, if you have 50,000 ounces of gold, and that value would be approximately $70 million Canadian. $70 million Canadian would never justify building a $30 to $40 million mill, which is probably what it will cost you. So because of that, we are in a very good position to team with the smaller high-grade projects. And really in this market, I think one of the things that investors have learned over the past 2-3 years is large volume, low grade doesn't work as much as less volume, high grade material. That's where you're going to be more profitable, and that's the area that we're focused on. I also think that and I would like to go to page on one of the I think the aspects that is very exciting about our company is the site itself, and it's very clear that so we own close to 900 acres. The 900 acres of land has been milled from a copper project, and then after that for magnetite. Slide 14 in the slide deck shows you that essentially it looks like a desert. Nothing can grow there. Nothing has grown there for 20 years. It looks like the Sahara Desert. And so what we did is we tried to be creative, because we know the mill can provide cash flow, and we know that the copper asset may provide cash flow, but we were looking at how to take a reclamation liability and create it into a profitable type of venture. And so we reached out to several groups and came up with the platform to take on industrial soils. So these are soils from construction sites, and in the construction sites they have to be deposited somewhere. We can actually take those industrial soils, place them on our tailings, and that is a form of reclamation because it's less contaminated than the historical mine site. So we did negotiate a contract with the group in the Lower Mainland, and that contract is for 80,000 tons, for which we receive $6 a ton. So it's a one-time permit amendment that will allow us to mill approximately $480,000. Now, the $6 per ton has no cost associated with us. When we're millers and we're miners. We're not contaminated soil specialists. We are working closely with local soil experts, environmentalists, biologists, to create to reclaim the property, but that doesn't mean that we can't make money off it. And the $6 a ton is net to us. They bring it to our site, they spread it, we check it, and then they spread it 1 meter deep, and then we're able to seed it. So we are in the middle. We have the first contract. We are now looking at expanding it to the rest of the site, where we would then open up the rest of the site to take on both local and soils from the region, regional soils. We are working with a potential contract with the City of Merritt to be to take soils from the City of Merritt's green bio plant that they have a new plant that they will be starting up in 2016, and we're hoping to be the site to work with them.
Let me ask a question. So what's the, let's say, the maximum capacity of storage?
That's a very good question. It's also a difficult one. I can give you my estimate. I would estimate it to be close to 10 million tons. I think that it's, and the reason why I struggle to answer that is because I'm not a soil specialist. And this is something that the numbers may change, because we need to we test the area around it. We know how large the site is, but it's going to come down to the soil, what are called CSAP, soil spec, contaminated soil approval professionals, to say, okay, you can take more than 10 million or you can take less than 10 million, but my estimate is 10 million.
Okay. The reason I'm asking is that, as I said in my introduction, I was introduced to Nicola Mining by a German-based fund manager, and actually that was one of the strong reasons for him to invest into Nicola. He said, like, that's kind of immediate cash flow, and from this cash flow the company can, well, that's what he said, easily finance all the other activities. So he does not anticipate too much further dilution of the shares. So if that works out, so if you can kind of rent that out, or whatever the term is, right, and create that kind of cash flow, then you probably don't need to raise a lot of more money. Maybe just kind of interim money, but if that comes in, it should finance all the other capex you might have, like restructuring the mill, doing your exploration on Thule and Treasure Mountain. Is that right, or am I just fooled?
I think you're correct. Now, I just would like to comment, though, is that the mill doesn't need restructuring. The mill can be operated tomorrow. So the mill is in great running shape, and in order to keep the mill in good running shape, we run it an hour a day. So one of the problems that a lot of companies do when they go into CCAA is they cut all costs, or when companies go into distress, they cut every cost they can, including costs that they should actually not be cutting. Because if you don't operate a mill, that mill will, this is not like your car. This is a machine that these components are outside, the rubber starts cracking, the ball bearings inside are very heavy, they start becoming flat. So we run the mill an hour a day just so that it can be used any time. Now the soils, yes, we look at them as we actually, I wouldn't just say the soils, I look at the soils and the custom milling as cash cows. So those are cash flow opportunities that are steady, and I look at the sale of the property for 2.25 million as another cash flow one-time opportunity. So I see two cash cows and a one-time opportunity that can support the exploration upside of Thule Copper and also Treasure Mountain. And sometimes we tend to downplay Treasure Mountain, but it still is a pretty exciting potential mine property. And remember, that's the mill was purchased to process the ore from Treasure Mountain.
Right.
So a lot of the investors historically really like Treasure Mountain. I still like Treasure Mountain. I think it's a very exciting property, but I think that we have to focus on, protecting investors from dilution. And the way you protect investors from dilution is by finding means of cash flow that will allow you to fund your expansion requirements.
Right. And I don't want really to bounce around, but because you mentioned Treasure Mountain, I just have a quick question. I was of the impression that Nicola owns 100% of the Treasure Mountain project. On the other hand, I just read a news release from i.V.m Mining, and they said something about they are doing exploration on this project. So could you just make that clear to me? What's the situation?
Well, yeah, that's Treasure Mountain is a region. It's a very large mining region, and so i.V.m has properties near where we are, and they use the word Treasure Mountain because if i.V.m uses the word Treasure Mountain, they know the population knows where the site is.
Ah, okay, good. Yeah.
And so we have the same. And I would like to, I'll talk about Thule Copper. The way, if we bring up Thule Copper and we mention Thule Copper, nobody knows where Thule Copper is until we say it's the entire property adjacent to Highland Valley Copper, and then immediately people know.
Okay.
So, yeah, we own 100% of Thule Copper, and recently, up until a month ago, we owned 50.1% of Thule Copper, and last month we negotiated an agreement with the former owners of Thule Copper to take 100% of that asset and in return give them a 2% NSR.
Okay, thank you very much.
We're very happy with that. Yeah.
Okay, perfect. Now I guess I understand. It was just confusing for me, being a German, that it's two different projects in the same location having the same name, but it's still two different projects, right? So anyway.
Yeah, it's like saying we're drilling in Barkerville, but Barkerville is a region, right? And so not every mine in Barkerville, so.
Fair enough.
Peter
Okay,
Epstein,
got it.
Did you have a question?
Yes, you mentioned possibly 10 million tons of capacity for industrial soil, even if it's 8 million or 6 million tons. What time period would you have to contemplate before you would get to that level?
The market in British Columbia. So I would like to explain one point about the market here, Peter. That's very important. The industrial soil market, because if you look at how much can you do a year, then in order to answer that correctly, you need to know, well, how big is the market? And the market for industrial soils in British Columbia is about 1.5 to 2 million tons a year. Currently, there is one site near Vancouver in Richmond, BC, that will be closing in 2016. After 2016, on the mainland, not Vancouver Island, but on the mainland, a lot of these soils will have to be shipped all the way to Alberta. There's nothing in between. And the reason is because when you have any soil of metal contamination, you cannot put it into a region that has a lot of rain. As you know, Vancouver is a rainy area, so the entire lower mainland gets too much rain to allow anybody to store these soils in the lower mainland, so they will not get approved. Then you have to go over the mountains. Our site is ideal because Merritt is in a semi-arid region. It's very dry. The pH levels of the water are very attractive, and we are sitting on top of. Our site has 27 meters deep, 27 meters of historical tailings. So to put that on top and to put a 1 meter cap, you've got that buffer below. So it's the perfect site to do what we're doing. Now, management can't take credit on the qualities of the site, because the site is just a unique site and there's nothing like it in British Columbia. The permits are very unique because they're grandfather permits from the 60s. We have very large water permit. We have the infrastructure's all there. But we can take a little bit of pride on being creative and you know, figuring out that the market of industrial soils. And that brings me to a key point, gentlemen, is that people will say, okay, if you can take 10 million tons, how much are you going to get a year and how much would you be willing to take? And so I think the answer to that is you certainly wouldn't want to take too much per year, because I don't see the market getting any cheaper. I see industrial growth, like it's, you know, urban growth, so urban sprawl is increasing. And typically when, you know, when you're living in the city and they dig down more than a meter, even though the soil is not, it's not hazardous or anything, but it's deemed contaminated because it's within city limits and it has certain metals in it. That's just part of being in a city. That is the perfect soil that we would like on our site. Now, as I said, the $6 per ton is the starting point, and I would assume that the prices or the money that we would receive per ton will go up from there, somewhere between $6 to, let's say, $20 a ton. The maximum that I think we could comfortably do per year would be somewhere between 3 to 500,000. I think just from a logistic and an operational perspective, it would be very difficult to do more than that. And if I were to say when you start out, where would you be? I think that it would be on the lower end of the 300, because we certainly, you know, you don't want to just start doing too much and then not doing it well. You want to build up expertise, build it up slowly, increase the capacity, and do that over time.
Thank you.
Yeah.
Maybe because we are on this slide with the financing. So today you announced that you closed the second tranche of the actual financing. Is that right?
Yes.
Okay. And so, yeah, what's the situation there? Will there be a third tranche, or?
Well, we just have it. We have what we can raise up to. So you know, whether there is a third tranche or not a third tranche, we just have that ability, the flexibility.
Okay.
And I think that you know, on the finance side, it's just very simple. When we took on this slide, you can see that we had a historical $25.2 million of debt. We restructured the company to bring that down to $6.5 million. We then immediately repaid $4 million in November 2014. We then stabilized the company, restructured it, and we did that with the debenture. Now, what's important, and this includes myself, gentlemen, is that the debenture, the investors of the debenture like the company, and I think there's enough upside that we can, if we execute on what we hope, what management says, if we can execute what I'm talking about, then we would get to a point where we would exercise the investors would exercise their debenture. So that's why we did this round rather than doing a debenture. We actually did equity because the investors of the debentures wanted to average down. So that's why we did units, equity units here. This is very uncommon, as you know, when junior mining companies in this market have an outstanding debenture, it's very difficult to raise any form of equity. Nobody wants to be behind the debenture. The fact that we are able to raise and close the first tranche and the second tranche really highlights how stable the company is financially, because investors who are putting their money into the equity units are looking for the upside much more than they are worried about the risk.
Okay. Yeah, so just from a couple of points from my end. So I'm not smart enough to totally understand this, to me, complicated settlement of the old debt into the debenture, convertible, whatever. But for me, what counts is the result, right? And you have been, and I guess that was you have been introduced to me, like you personally, as being kind of the restructuring specialist, like a troubleshooting guy. And this was, is this part of from your background at Goldman Sachs? Is this where you learned to kind of fix these types of situations? And it's very obvious to me that your contacts from your time while you have been at Goldman Sachs probably helped you a lot in getting this task or this challenge completed successfully. So, but the end result is that you kind of got rid of the majority or the big stake of this of the debt. You repaid already part of it. The debt holders right now, it's very probable that they won't insist of a repayment, that they will convert into shares, right? So is that kind of it in a nutshell?
Yeah, I mean, I'm very careful. So let's go back to my background. So I'll start with my background, and then I'll move forward to answer this question. But I was very lucky in my career to have great mentors, and because without great mentors, it doesn't matter how intellectual or gifted or smart you are, you're never going to know how to do things correctly. It's like cooking. You need a chef to teach a apprentice, and so I was an apprentice in a great firm, and was taught in that firm how to structure things. So, but there's two things that I can say I took away from my finance career. One is that you become financially savvy and you understand the risks of debt and you understand the benefits of debt. So certainly the company Huldra Silver was not structured correctly. So now we've restructured it correctly. One of the things that you do to restructure something correctly is that you put the debt holders on the equity side as well, because if you have people who own debt and they also own equity, they're much less likely to be aggressive because they're also equity holders. And so if you look at who the debt holders are, all our debt holders currently are also our largest equity holders. So that's what you call friendly debt. I would say probably just as important, though, in my background in working not just for Goldman but in private equity and restructuring, and I've probably been involved in somewhere between in debt, debt restructuring of easily over $50 billion and corporate restructuring of over $10 billion. And as part of that, as part of when you do the restructuring of a company, is you don't just, restructuring isn't just redoing the numbers, because all you have is you've redone the numbers, but you have nothing other than new numbers. What you have to do is rethink the platform. Does the platform work? Because some platforms don't work. And I'll give you an example with Huldra Silver, that running a silver mine in this bad market and having a mill 90 kilometers away, it doesn't work. So then you have to think, okay, what can work? What are the assets that we have, and how do we maximize that? And so I was trained quite well, and through my mentors, how to maximize value. And that's why, Michael, where looking at the soil, so you have something that is a liability and you create something that you can make cash flow out of it. The mill, in a market like this, the question is, does it make sense to mine silver? My guess is probably no. You're better off mining high-grade gold and milling that, because silver has decreased in value much more than gold has. So it's looking at that market at that time and always thinking of potential new opportunities. Now, this brings to a very important point, is we have the 4 milling contracts. The question is, well, how long are those contracts, and how flexible are they? So we have those contracts, all 4 milling contracts, we have exclusivity on their sites for 4 to 5 years. They cannot ship their ore anywhere else but us. But they do not have exclusivity on us. We have the ability to terminate the contract, because what happens if we have a milling contract and somebody with a much better opportunity comes up? So we, as Nicola Mining, need that flexibility to be able to change our platform and change our source of material at any time. So that's something where it's not just a refinancing savvy, but we were able to show that we also understand the structure side of the business, right? Because you've got financial restructuring and the business restructuring. And so I think from the business side, my background at Goldman and my background at Olympus Capital and my background in taking companies public, doing SPACs and taking 2 companies public on NASDAQ also helped me to bring the company to where we are right now.
Great.
Do you have a question, Peter?
No, I was just kind of going through the math on the industrial soil opportunity, and I think it's sort of like an annuity, and a long-dated annuity, and I think it's pretty valuable. So something I'm going to work a little bit more on.
Yeah, and you know, I have to say, I like the term annuity, because that's like, essentially you're looking at a bond, right? And you're looking at rent. And I think that Nicola Mining has 2 assets that we are like landlords. One asset that we're a landlord on would be the contaminated soils. The other asset that we're a landlord is the milling, because we're an airport, and I always use the analogy that these projects are airplanes, and they need to land, and they need to come to the airport, and so we are that airport. And there's always going to be new projects, but it's going to be very difficult to put up a competing mill in British Columbia because of the permitting, because of the administrative barriers. So I think that you know, essentially we have 2 annuities, and I have to highlight, I wouldn't underestimate the value of the milling annuity, because I think that, you know, from the 4, and I'll give you some numbers here, gentlemen, is our first mill contract is on a site which we have 4 to 5 years exclusivity, and they have to bring us guaranteed 0.5 ounces a ton. Now this is a property that has a 324,000 historical gold resource at 0.7 ounces a ton, but the contract that they have to bring it to us is 0.5 ounces. The other contract we have is for minimum 7 grams per ton, but it's very close to where we are. They have on ground a historical stockpile of 4,000 to 6,500 tons, and they will in the spring take through road work have another 2,000 tons that they will ship to us. So I would expect those 6,500 tons to come to us early spring. And this is very important, because another very important aspect of our mill is that we have the capability of milling 2 different types of mill feed at the same time, because we have 2 separate crushing systems. So on the main side we can do 1 set of ore, and on the smaller side we can do another set of ore that will focus on the free gold type milling with the concentrator. So we can actually be milling and keep separate 2 sources of gold at the same time. The other project that we have has to bring us 42 ounces of silver per ton and 3 grams gold equivalent. So that's very attractive. And then the last one is a one-time shot, and the average grade that they have to provide us is 1 ounce a ton. But it's only 200 tons. But these are the 4 contracts that we have for next year, and we are continuing to negotiate with different groups, because another key component here is that from the 4 groups, 2 of them were actually introduced to us from individuals who work for the Ministry of Mining. And the Ministry of Mining introduced them because the Ministry of Mining would like projects to become operational. You cannot get a mine permit if you don't have a place where you can get the milling done. You cannot get a bulk sample permit if you're not able to answer to the ministry where it's going to get processed or milled. So we essentially are the ticket that allows them to get their permit. Without us, they can't even get a miner or a bulk sample permit. So that's something that where we add value as a partner, where the groups approach us and they say, can you help us with our mine permit? And we will help them by taking, as I mentioned, a contract where essentially after costs we split the profit 50-50.
So those four contracts, what might that do for your mill in terms of capacity utilization next year, or maybe the second half of next year?
If I would, the one contract is a very small contract, 200 tons, so that can be essentially milled in a day. The other contracts will take longer. I would say the capacity for next year from those four contracts, if they were all to reach to the point where they are able to start mining, would be about 1/3 of our production capability. So we still have upside. Now, it's also very important that what we don't want to do is start up, shut down, because there's a cost associated with milling something and then closing, and milling something and then closing. So before we start milling any of the material from the sites, we have to have a stockpile of 2,000 tons from that source, other than the 200 ton. So from the three projects, they have to bring to our site 2,000 tons prior to us commencing milling, and that way they can continue mining. Sooner or later, as you're mining these small resource, high grade assets, the key to profitability here is not to bring in too much dilution. And many of the miners, they hurry themselves, or they don't high grade the ore on site. We're asking our clients to high grade the ore on site, because if it's a narrow vein, there are a lot of these places you can tell the high grade gold from the high grade gold vein sections from the surrounding lower grade waste rock. Well, we're not interested in transporting and milling waste rock. So, once they get to 2,000 tons, then we will start mining, and then they will continue to mine and ship it to us. We will not mill two of our larger contracts at the same time. We will finish one and then the other. We certainly are not going to be at where we are right now. We're not full. Our capacity for next year is not full. We have idle capacity, and we're looking for options to fill that. I can say that we are currently in discussions with other groups. And I think, if you look at what our corporate strategy is because going forward, people say some investors struggle with understanding what we are. They say, are you a contaminated soil site? Are you a mill site? Are you a miner? What are you? And my answer to that is that we're a company focused on cash flow. Because in this market, it doesn't matter how good your resource is or what the grade is. If you're not cash flowing, your NPV is zero. And so, companies that have great resources in the ground, in a bad market like this, it doesn't get recognized by investors. Investors aren't interested in this market to put money into exploration programs. They want to know, how close are we, if we put money in, how close are we to cash flow? I think that's the investor mentality in Canada right now. So Our corporate strategy, if you look, is custom milling silver and gold. That is a cash flow type of platform, both of them, right? We are looking for M&A opportunities because as you have these high-grade properties that are not able to raise, as both of you know, most of the junior mining companies right now are low on cash, a lot of shares outstanding, and they're trading for pennies. So it's difficult or virtually impossible for them to raise $20 million for a mill. So that puts us in a good position, and as a former M&A banker who has experience in structuring, what we want to do is we would like to look at more properties now that we are financially stable and look at how can we unlock the value of your ore at our site, because ultimately the intention of Nicola Mining is not to just be a mill partner, it's actually to mill our own material. And so if you were to look at the short term, what's your short term goal? Yes, it's mill processing, but the long term goal has to be consolidating these projects into your company and then milling them in your own mill, and that gives our investors the upside of both sides. And I think that we're in a market where we can increasingly look at attractive M&A opportunities. We will continue to work towards, and we have been working with the Ministry of Environment on this to create an industrial soil disposal facility. That is what we've talked about, is accepting the soils on the entire property and then using that as part of the reclamation. Now, Thule Copper, I would like to talk about that in detail, and I've actually saved the best for last on purpose. So I will get back to Thule Copper, and I would just like to also look at the aggregate property and mention the I'll just mention it, is that we do have the offer for $2.25 million on the property, and that will bring in, and it's subject to us having one permit amendment. Once we get that permit amendment, we can close on the $2.25 million, and that's a lot of working capital for the company as well as M&A opportunities. And I'll stop for there for now. Do you have another question, guys?
On the toll milling, by the way, which again seems like a pretty good opportunity as well. I think you've got a couple company makers within the company. Toll milling, let's say you get to 100 tons per day sometime next year, and your capacity is 300 tons per day. But how can investors look at what that 100 tons per day might bring in terms of revenue or cash flow?
Well, I think that you have to, that's a very, very, it seems like a simple question, Peter, but it's really difficult, because I would make a point that we will certainly, when I talk about excess capacity, we would never run the mill at 100 tons a day. That doesn't make sense. We'll run it at 200 to 300 tons a day, and then we'll shut it down. But because your efficiencies are much greater at higher capacity than lower capacity, and if we run the mill at 100 tons a day, essentially our cost of operations is a constant. And so whether you're running at 100 tons a day or 250 tons a day, the constant of your milling cost would be similar, but as a ratio of what you're getting out of it will increase. So we would run it 250 tons a day and then shut it down and then put it in idle it, right? So that's a key point to understand. I would like to clarify that running at 1/3 capacity doesn't mean that we're running 100 out of 300 tons. So we're running 1/3 of the time. The second point is that depending on the site, now the one site, I'll give you one example of a property that we have. So we have one site that has historical grade of 7 to 9 grams. So you can work out what the 7 to 9 grams is, what value that is per ton. You can then look at the cost of trucking of somewhere between, approximately 40, 30, so somewhere between around $25 to $30 a ton. And then you can look at the milling cost of $50 a ton. And then you look at actually less, sorry, for around $30 to $40 a ton for that asset. And then you can look at the mining cost of $26. So because it's a low mine, it's at surface, so it's very easy to get it. Well, the numbers you're going to get from that are very different than the one that has 0.7 ounces historically, but you're looking at a trucking cost of $90 a ton, a mine cost of $80 a ton, and a milling cost being constant, the milling cost being at $50 a ton. So it's difficult to come up with a figure of what your cash flow, and I'm as the CEO, I'm very limited in what I can talk about, about projections. But what I can, but it's also limited by the fact that not all this, every site is completely different, and every site will have different grades, different trucking costs, but the milling cost is somewhat constant.
And just to be clear, every time you say site, you're talking about your partnership miners.
Correct.
Okay.
Thank you.
Peter, maybe you now move on to Thule as being the highlight, as you said, because we should sooner or later come to an end of this discussion.
Yeah.
So maybe just continue.
Sure. So the reason we're very excited about Thule Copper is the following: is that that area is a prolific copper gold region, and if you look at our mineral claims, so we have these 20 mineral claims essentially that cover 8,458 hectares with 10 contiguous mining leases. We also have, if you were to put it in scale, and Highland Valley Copper is I believe it is the largest open pit copper mine in Canada. It is also the largest single capex investment in the metals that Teck Resources has. And one of the sites that several investors are most excited about is Thule, and we just negotiated to attain 100% of Thule Copper, and for a 2% NSR. The site is in a very prolific copper gold mining region, and we've been working with. We have an NDA in place, and that NDA is with a major copper producer. Now, we are beside Teck Resources Highland Valley, and I think that if you were to look at what their grades of Highland Valley are, and that is Teck Resources' single largest investment into metal mining site. The mill is a multi-billion-dollar mill. They recently did close to $400 million in upgrades, and so we think that there is a significant upside in our site, and I think that these points really highlighted. I mean, the old historical mine had a cutoff grade of 0.7%. 0.7% was, in this market, is considered somewhat high grade for a pit operation. Now, we don't have 0.7%. We certainly know that it's lower, but what we do know is that we have somewhere between 70 to 90 million tons of waste rock, and we know that a portion of that it carries copper. We also know that from the old mining documents that when Craigmont mining closed in the 1980s, in 1982, copper prices were at 60 cents, so it didn't make sense because it was 60 cents to mine it, and it was 62 cents to, it was 62 cents to mine it, and 60 cents was the price of copper, so they were losing 2 cents a ton, and then they started magnetite, because this is one of the highest grade magnetite properties in the entire, but they left behind 500 million pounds of 0.42 grading copper, and that is fairly well drilled up, and that is quite accurate. They also left behind 27,754 tons, which works out to about 50 to 60 million pounds of copper grading 1.79%. So we have 560 million pounds of copper grading 0.43%. That's when copper prices pick up, that's something that could have value. But I think the main value here is if you look at the potential porphyry and skarn targets, and if you look at the slide, what you'll see is you'll see 6 black circles and you'll see 1 large red circle. The 6 black circles seem to be in a line, and you see that it is called the Nicola fault. That is the second, it's one of the largest faults within British Columbia. If you look at that red circle, you'll notice that it's surrounded by orange and colors, and then the center is green. And then you've got that high heat dot to the top left, and then you've got the section on the right. The left part of that circle is the Highland Valley Fault. So this fault goes directly from our property right up to Highland Valley Copper. And one of the things that is very common, and miners know this, is that where there is a skarn, there can be a porphyry, because skarns are driven by porphyries. Skarns are the higher grade, offshoots of some porphyritic type of mineralization. And what we have is we have 6 skarns on the same site that are with the orange dot in the middle, and this has never been drilled. And one of the questions I get asked all the time is, well, why didn't they do any more drilling? Why did they stop? If they owned all this property, why didn't they do anything till now? The answer is very simple. The highlighted area that we have, that you see, took the previous owners about over 20 years to accumulate all those properties. So they didn't have all those properties. This is something that was accumulated as claims came up. They started building this property, this set of properties. So it took a long time. And another thing is that because the magnetite operations were very profitable, that there was no need to go back to focusing on the copper. So, but what we do know is we know that one of if you look at the Craigmont open pit, it's kind of mind-boggling, but if you look at that little dot, that little circle, at one point we have to realize that this was the largest open pit copper mine in the world. And then you look at all these skarn targets that we know are mineralized. We don't know to what extent they're mineralized, but that is something when we take the cash flows, as you talked about, Michael, when we take the cash flows from our annuities or our cash cows, this is something where this could be more than this could be a huge company maker.
Okay.
And what would your initial drill program look like on that property?
I think that this next summer we certainly want to do surface sampling. I think, and we have. I think before we do drilling, I think we need to do surface sampling and some IP. But we certainly know where the targets are. And one of the things we have to realize that back in the 80s, so the previous owners had pieced this all together. But remember that when this was a mine back in the 60s and 70s, there was no such thing as an aeromagnetic survey. So if it wasn't sticking out of the ground, you didn't know it was there. And so the only place where the reason they found the old copper mine is because it was sticking, there was high-grade copper sticking out of where the historical pit was. Those high-grade, where you see those purple dots, that's magnetite driven. So you see within our property very high grades of magnetite, but what the geologists, that when they looked at this, were all excited about is that what you want is the high temperature sections adjacent to a lower temperature green. So the green means that it cooled at approximately 400 to 450 degrees, and then the higher material at 800 degrees, the purple dots. So if you look at the old historical open pit, you can see its green color, and you can see that these skarn targets have a combination of green plus the higher color, higher temperature oranges and reds. So do I think that we'll be doing diamond drilling this summer or next summer? We could be. I mean, we have been approached by a group to do flow through. If we do that, then we would certainly start with groundwork, and then do not an extensive diamond drill program, but at least try and put a couple holes in a couple of the scarred targets. Ultimately, though, Peter, like, the main focus is that red circle, because if that is a porphyry, it would be a very, very large target. And to put it in perspective, that little Craigmount open pit took out 1 billion pounds, close to 1 billion pounds of copper. So you can see that red circle, that potential porphyry section, is a much larger area.
Okay, guys, in trying to come to an end here, I have one final question, and that's about the share structure and major shareholders. And then I would ask Peter Epstein to give us his, let's say, the 2 cents, his opinion about the company. And I think, Peter, you're also a shareholder, right? So keep that in mind when listening to Peter Epstein's words. And but Peter, and then the final words will be, of course, you, Peter Espig. But maybe answer my question about the share structure and market cap and shareholders right now.
Currently, so prior to this round of this raise of equity units, we had approximately 80 million shares outstanding. And through the 1.9 million that we just raised, we have between 105 to 110 million shares outstanding. That would put us at a market cap. Our price today, our share price today is 7 cents. So we would have an intrinsic market value of size of 7.4 million. Now, I mean, again, one of the things that I hate when CEOs talk about, when they talk about how undervalued they are, I'm not going to make that statement and say we're so undervalued, we're so undervalued. I think the value will be corrected. Yeah, I think the value will be corrected as we continue to execute, because I think when we announce that we've now officially exited CCAA, there's a bit of a market correction. When we announce that we will accept our first soils, we've now proven that we can accept soils. There's a correction. When we start our first milling contract in the spring, and that comes to us, there's another correction. So I think there are several correction events, but what I will say is that direct investment into infrastructure, not the exploration or something like that, but we have in machinery and material, we have close to $40 million of investment of, let's call it, metals. The company has invested, over $51 million. And so if you look at the investment of what Nicola Mine, raised and borrowed, and to put the company where it is, 7.4 million, and then if you look at the enterprise value, it's far below what was invested. I think that considering that we've got very friendly debt, that the company is in a position where it will be cash flowing. I do believe that on the junior venture exchange, that we're in a good position to provide shareholders equity upside if we are able to execute on those platforms.
And can you say something about the major shareholders?
The major shareholders, we have shareholders of the company include Waterton Global, CCM, Concept Capital Management, Coeur d'Alene is a major shareholder, and we have Wall Street groups as well. We have funds, like, actually this past round, I can say this past round that we've raised tranche 1 and 2 of the 1.9 million is all institutional and all like various funds. Some from the United States, some from Canada, some from Germany, some from Bahamas, but a global. I think that this was a very rewarding raise so far, because what I have learned is that everybody knows the old Culver Silver. Remember that this company had a $200 million market cap. So one point out, people knew about it, and people are just waiting for. I think the biggest thing is people are waiting for us to exit CCAA. But this round, the investors that invested are all savvy mining funds, and a couple of them were one of 2 or 3 investments all year that they've done. So it shows that we're starting to, in a really tough market, not just execute on our business, platforms, but it also shows that we're starting to get traction with the more savvy mining investors.
Okay. Yeah, so thank you very much, Peter Espig. And you forgot, while talking about your shareholders, you forgot one other shareholder, which is Peter Epstein. So Peter, maybe you say something like your conclusion of this whole event, a couple of thoughts about Nicola Mining. Before then, Peter Espig will just finalize everything.
Yes, thank you, Michael. I think Peter Espig did a great job. I think the corporate presentation available on the website is actually quite well done as well. I can start by saying, if you look at industrial soils, Peter said $6 to $20 per ton net to the company over time, of course. He said 300,000 to 500,000 tons per year. If you just take a haircut to that, already you're at, let's say, $2 million of cash flow. That would be 200,000 tons per year at $10 net to the company. That's $2 million. That's an annuity, so you could take a perpetual annuity calculation. You've got $20 million of valuation right there, which is more than twice the entire market cap. So that's just one of the assets that have been discussed today. And you can do the same kind of back of the envelope work on the toll partnerships segment, and you're going to get a multiple of the $7.4 million market cap. So I think that with hard asset value in the 30, 40, $50 million range, that's my opinion, I feel like the fundamental downside is quite low. And then in terms of liquidity, they're going to possibly sell that non-core asset for $2.2 million. You've got $1.9 million just raised in this capital raise, so they have $4 million of cash to be able to pursue any corporate initiatives and, of course, to fund working capital. So overall, it just seems like a no-brainer to me, and that's why I'm an investor, and that's why I took them on as a sponsor on my website. So Nicola Mining is one of my favorite picks for 2016.
What's your? I'm not sure if you do this kind of stuff, but what's your target price? What's your target price?
I don't necessarily have a target price. I'm telling you that I feel like the fundamental downside is virtually none, and not many companies or analysts could say that about a small cap natural resource company. And I think the upside is truly a blue sky type of upside within a year, 18 months tops.
Okay.
Yeah, guys, can you hear me?
Yeah.
Yeah, the one point I would say, Peter, just I want to correct something, is that we raised the 1.9 million, but remember we paid out, we paid back Waterton 1.3, and then so, you know, from the funds that we raised, a significant part of that has already been, that's what we required to exit CCAA.
Right. Yep.
So, we can't take the number of 4 million, but certainly when we sell the property, you know, one of the things that people are always asking is, what's your burn rate? Well, once we start taking soils and once we start milling, and if we sell the property, which I expect we will, we don't have a burn rate, we have an accumulation rate. So, but I just wanted to clarify that 1.9 million is not all in the bank.
Right, it has gone to paying down debt, which is a good use of funds, but you're absolutely right, of course.
Yeah.
Okay, so yeah, my 2 cents. Again, I was introduced by a German fund manager to Nicola Mining that I know that has a pretty good track records with his investments, let's put it this way. I really like this kind of combination between let's say old-fashioned cash-flowing businesses, yeah, like the especially the industrial soil, also the gravel, yeah, but even if it might get sold, yeah, and then of course this type of toll milling opportunity, even if Peter Espig explained to us what is the difference towards the South American toll mining millers. But then on the other hand, you also have, so that's kind of a protection, yeah, also against further declining commodity prices, which I don't see in 2016, but you never know, right? So that's kind of it's really a protection. That's what also Peter Epstein said. Yeah, there's not too much downside left on the company at this market cap right now. But on the other hand, if the resource market, and I'm sure that all three of us agree that it won't stay that depressed for the rest of the time, right? So there will be a recovery. We don't know if it's coming up in 2016 or 17 or whatever, but some point in time there will be a recovery of the underlying commodity pricings, and then we have the upside, yeah, of right now 2 projects, which is Treasure Mountain and we have Thule Copper, and as Peter Espig indicated, yeah, they're also open to other acquisitions if it's kind of a, let's say, bargain hunting opportunity, right? So I really like this combination, teamed up with the management team. Yeah, Peter Espig, with his background, he already proved, yeah, not only talking, but he already proved that he can execute. Yeah, he took over the company in a, and forgive my French, yeah, in a fucked up situation, restructured it, yeah, successfully in this challenging market environment, which I trust. You had a couple of nights without any sleep, Peter. So my trust, yeah, I'm not only betting on the project and the mill. I'm also putting my bet on the management team, especially on Peter Espig. So yeah, that would be my final thoughts. And now the final words are for you, Peter.
Yeah. First of all, thank you for taking this time. I would say one of the things that I often get asked is, well, why are you not out promoting the company more? Why are you not worried about your share price? And one of the things that as a CEO that in this junior mining space, I think too many people are worried about about share price and not execution. And so there is, I always, one of my favorite Japanese sayings is, the smart eagle hides its claws. And you don't talk about what you're going to do, you talk about what you did or what you executed on. And I think we've been very quiet as a company up until now, because as a distressed turnaround specialist, if you were to say to me, what is the worst case scenario for you as a CEO of Nicola Mining that you can imagine? The worst case scenario for me would be to see a share price start moving upwards, and the share price goes up and up, only to fall short of execution and then have it crash. That's the worst case scenario. The thing that excites me though about Nicola Mining, and the reason that why I feel comfortable in talking with you gentlemen in this interview, is that we're on the cusp here of executing on very key platforms that will take the company forward, and will not just take it forward again, as I said, from a restructuring on a corporate or financial side, but that's where you can start talking about it to investors so that they can benefit from it on the investor side, because they're all different. And the execution of the financial side is not always, but should be related to the execution of the corporate side. And the combination of executing on the corporate side and the financial side should then be displayed in the investors' upside. And so that's something I'm looking forward to 2016. And again, I have to mention that I'm an investor. I've invested in every tranche since I've taken over as CEO. I'm an investor in the debt side, I'm an investor in the unit side, I'm an equity holder. And so what I'm excited about is we're finally being able to and not to benefit on all three fronts.
Perfect. So, guys, thank you very much for your time. I think we learned a lot, at least I learned a lot. If you liked what you saw from Peter Epstein and myself, so you can subscribe to Peter's newsletter on www.epsteinresearch.com, and for my English speaking, at least when I try to speak English, for my English speaking newsletter, it's Stock-Telegraph-International.com. So, guys, thank you very much for your time. Have a good night. Bye-bye.
Okay.
Thanks, guys.
Thank you.
Ja, also jetzt sind die beiden raus. Ich werde das jetzt nochmal versuchen, auf Deutsch zusammenzufassen. Also es war wirklich gut, dass ich hier von dem deutschen Fondsmanager auf die Company angesprochen wurde. Ich glaube, der Peter Espig hat hier wirklich sehr schön die Highlights erzählt. Ja, also man hat auf der einen Seite halt einen Schutz gegen mögliche weiterfallende Rohstoffpreise, obwohl ich das mittel- bis langfristig nicht sehe, dadurch, dass man halt Cashflow-Business hat aus diesen Industrial Soils, also ich sag's mal in meinen Worten, ja, da wird irgendwelche verseuchte Erde wird auf dem Projekt bei Nicola Mining, was noch verseuchter ist, ja, hört sich jetzt doof an, aber dort kann man das lagern und man kriegt da pro Tonne von diesem Müllzeug oder von dieser verseuchten Erde, kriegt man aktuell bei einem bestehenden Vertrag $6, aber das kann hochgehen bis $20. Man kann da, also den ersten Vertrag hat man geschlossen, man ist gerade in der Verhandlung für den zweiten Vertrag und man kann da wirklich sehr gutes Cash draus generieren. Das wäre also die erste, was gar nicht wirklich Mining related ist. Ja, also da hat man eine schöne Cash-Cow. Das zweite ist, dass man hier die Mühle hat, ja, wo man aktuell schon 4 auch Vertragspartner hat. Ja, das ist so ein bisschen wie Toll-Milling, also sowas wie Sie vielleicht von Inca One kennen, ja, und allerdings mit leicht anderen Parametern. Aber dort verarbeitet man einfach das Erz, und zwar sehr, sehr hochgradiges Erz von anderen Projekten, von anderen Unternehmen, und hat danach ein Profit-Splitting nach Kosten. Ja, jeder trägt seinen Teil der Kosten und hat dann ein Profit-Splitting von 50-50, also sehr partnerschaftlich. Dazu hat man aktuell noch ein Kieselprojekt, ein Gravel, ja, ich glaube Gravel ist Kiesel, also man hat da Kiesel, und das versucht man, das braucht man natürlich zum Bauen von Straßen und Ähnlichem, und das versucht man aktuell zu verkaufen für 2,5 Millionen Kann-Dollar und hat anscheinend auch ein Gebot vorliegen von 2,25 Millionen. Also man ist sich da fast einig, sage ich mal so. Das würde weiteres Cash in die Company bringen. In der Vergangenheit, und das ist halt was mich wirklich sehr positiv überrascht hat, ja, also die Hydra Silver, die war wirklich am Ende. Ja, also man hat da vielleicht die Finanzstruktur nicht so sehr gut aufgestellt gehabt. Ja, man hatte sehr viele Schulden aufgenommen, um die Infrastruktur dort, also die Mühle und Ähnliches aufzubauen. Und ja, dann sind allerdings die Preise für Silber, in dem Fall war es, in den Keller gegangen. Man hat einfach seine Schulden nicht mehr bezahlen können, ist dann gezwungen worden, ja, in diese Creditor Protection, das ist dieses CCAA, ja, das ist also eine Art Schutzprogramm, ja, zu gehen, und um einfach mehr Zeit zu haben, um die Company zu restrukturieren. Das war dann auch der Zeitpunkt, wo der Peter Epstein, der Peter Espig sich dann involviert hat. Ja, er war vorher schon mit der Company bekannt, aber da ist er dann reingegangen, hat den President und CEO Posten übernommen, und mit seinem Hintergrund als Banker bei Goldman Sachs, ja, als Spezialist für Restrukturierungen, ja, das hat er halt bei Goldman Sachs hauptsächlich gemacht, hat er dann diese ganzen Schulden restrukturiert, hat mit Waterton, das war einer der großen Kreditgeber, hat da wirklich sehr gute und erfolgreiche Verhandlungen geführt. Man hat die jetzt alle restrukturieren können, hat auch schon wieder von den neuen Schulden einen großen Teil wieder an Waterton zurückbezahlt, aus den Kapitalerhöhungen, die man jetzt gemacht hat. Das ist, wie gesagt, es ist ein bisschen kompliziert gewesen, aber man hat auf jeden Fall jetzt eine sehr, sehr, aus meiner Sicht, gesunde Struktur. Man hat die jetzigen Kreditoren, also die Geldgeber, die noch einen Kredit gegeben haben, hat man nicht nur als Kreditgeber, sondern was er so schön Friendly Creditors genannt hat, also man hat sie auch als Aktionäre, ja, sodass diese Aktionäre, Schrägstrich Geldgeber, Kreditgeber, natürlich auch kein Interesse haben, die Firma irgendwann in den Bankrott zu treiben, weil man auf der anderen Seite auch Aktionär ist. Ja, also das nennt er Friendly Debt, und ich denke mal, das ist halt wirklich was eine sehr gesunde Basis fürs Unternehmen geschaffen hat. So, und darüber hinaus hat man jetzt einfach auch noch die Explorationsprojekte, beziehungsweise Treasure Mountain war sogar mal in Produktion. Das war eines der ursprünglichen Kernprojekte von der Hydra Silver, und die Idee war eigentlich, dass man das Material von Treasure Mountain halt zu der eigenen Mühle, die 90 Kilometer entfernt ungefähr liegt, dass man das dorthin bringt. Und ja, aber es hat halt, wie gesagt, nicht hingehauen. Aber trotzdem ist natürlich Treasure Mountain immer noch ein sehr, sehr interessantes Projekt. Zur Mühle habe ich noch vergessen. Also es ist so, dass eigentlich jedes kleine Unternehmen in British Columbia, also es ist eine Provinz in Kanada, dass die eigentlich in ihren Einreichungen, also bevor sie die Genehmigung bekommen. Ja, sie brauchen immer, oder sie müssen nachweisen, dass sie irgendwo auch so eine Mühle haben, ja, die das Gestein dann halt auch verarbeiten kann. Und eine Mühle zu bauen, ja, das kostet mal locker einen zweistelligen Millionenbetrag. Und selbst wenn man das Geld hat, ja, kostet es auch noch Zeit, und man kriegt wahrscheinlich gar keine, so hat der Peter Espig das gesagt, es wird sehr wahrscheinlich aus seiner Sicht nicht sehr viele neue Genehmigungen für Mühlen geben. Also man hat da so ein bisschen, so ist man der Flaschenhals. Ja? Also man kann sich jetzt in der Umgebung die hochgradigen Projekte aussuchen. dann das Material in einem partnerschaftlichen Verhältnis verarbeiten, split die Profits, hat Cashflow, man hat das Cashflow aus dem aus diesem Industrial Soil, also aus diesem verunreinigten Erdlagergeschäft, ja, da hat man einen sehr guten Cashflow, und daraus kann man dann das Explorationspotenzial, was wir auf dem Thule, ich nenne es jetzt mal Thule, also Thule, wie er gesagt hat, Kupferprojekt, kann man dann halt vorantreiben, wenn der Kupferpreis dann mal wieder ansteigt. Ja, aktuell macht das vielleicht relativ wenig Sinn, aber man hat dann neben einem der größten Projekte von Tech, und zwar ist das High Valley, lass mich mal gerade gucken, High Valley Copper, das ist also von Tech Resources, ist die größte Open-Pit-Kupfermine in Nordamerika oder in Kanada, glaube ich, und die haben geringere Gehalte als Thule Copper bisher nachgewiesen hat. Und es liegt direkt daneben. Ja, also es scheint ein sehr spannendes Projekt zu sein, ja, wenn denn Kupfer wieder irgendwann mal steigen sollte. Und ja, das ist einfach, also diese Gesamtsituation, ja, finde ich halt wirklich ganz spannend, weil ich nicht glaube, dass außer in Sondersituationen, ja, wenn man jetzt natürlich kurzfristig irgendwie noch ein anderes Unternehmen akquirieren will und kann das vielleicht nicht ganz oder nur teilweise in Cash machen, in Aktien machen, dann muss Nicola vielleicht nochmal auch eine Kapitalerhöhung machen. Aber grundsätzlich, ja, so wie ich auch den Peter einschätze, möchte er nicht allzu viel Verwässerung für die Aktionäre. Er selber hat auch gesagt, er ist selber Aktionär und es liegt also auch in seinem Interesse, dass er nicht allzu viel Verwässerung in die Aktie kommt, insbesondere nicht bei dem Kursniveau aktuell bei 7 Cent. Ja. Also es könnte wirklich was ganz Spannendes sein. Also ich finde es gut, muss ich ehrlicherweise sagen. Werde mir auch überlegen, ob ich da vielleicht nicht mehr in diesem Jahr, weil, wie gesagt, wir haben jetzt Tax-Loss-Selling Season, ja, die wird auch noch irgendwie die nächsten Tage anhalten, und Nicola ist auf einem, sag mal, nahe der Jahrestiefstände, ja, die waren auch schon Anfang des Jahres höher, also da kann auch noch Tax-Loss-Selling reinkommen, ja, so eine riesige Liquidität, müsste ich nochmal gucken, aber ich glaube, eine riesige Liquidität ist nicht in der Aktie, also ich würde noch ein paar Tage warten, ja, und überlege mir dann auch wirklich persönlich, ob ich da mir mal ein paar Aktien ins Depot lege. Ja, das soll es so viel für jetzt gewesen sein. Ja, Sie sehen, ich rede schon ein bisschen Quatsch. Das war ein langer Tag für mich. Hoffe, es hat Ihnen trotzdem gefallen, und starten Sie einfach damit, sich die Nicola Mining mal auf die eigene Watchliste zu packen, sich auf der Webseite ein bisschen schlau zu machen. Die Präsentation ist auf der Webseite, und ja, schauen Sie mal, ob das in Ihr Portfolio passt, auch von Ihrer Risikostruktur. Und ich denke aber, dass wir da in 2016 höhere oder wesentlich höhere, ja, das kann bei so einer Aktie, die jetzt bei 7 Cent notiert, mit 80 Millionen ausgegebenen Aktien, kann das auch relativ schnell gehen. Und ja, ich bin wirklich sehr gespannt, werde die Company weiter verfolgen, und habe jetzt genug geredet. Das war es erstmal von meiner Seite. Vielen Dank. Tschüss.